Chief Executive Neal Froneman is with us in the studio. The headline, according to my colleague Barry Sargent, who has been focusing on your results today, Neal, is that you need to find 30 million rand somewhere.
Yeah, good evening, Alec. 30 million rand is a far cry from the 120 million we're looking at just before the end of the year in, the most difficult market you could imagine. So I'm very confident that 30 million rand is obtainable.
Explain to us the background to this, though, why you do have that shortfall.
It really stems from we raised a bond back in 2007, late 2007, of 600 million rand. That was initially sufficient for the completion of Modi East.
This is the new mine that you developed.
It's a new mine that we're building, yeah. We subsequently intersected water underground, which delayed the project, cost us more, and we ended up with a shortfall of about 120 million on an 800 million capital project. So it is significant, but that is the reason we find a shortfall at the moment.
So how much of the 800 million capital project have you paid for and made happen?
We've paid for 550 of the 800. We've got a couple hundred million in the bank. We've got other expenses, and the net result is we're short of about 30 million, which we only need by the end of this year.
How are you going to go about raising it?
We've got a number of opportunities. You will remember that we used a very smart way of raising this first 90 million. We entered into a share swap with Trinity. And that raised us money at, I would say, at a premium at the time.
What was the just to refresh our memories? What was the valuation of Aflease shares in that share swap?
We did it at about R1. We eventually placed the shares we swapped with Investec, and sold the Investec shares that we swapped for those shares. And the net result was we did that at a premium of about 30%, so it was about R1.28.
You're trading at 157 now, so at 128 doesn't look that cheap.
No, it doesn't. But I would argue we're trading at 150 odd because we did these type of things. The funding reduced an overhang, and as I say, it was done at about R1.
How does one value a developing gold miner like yourself that's going into old projects that have been worked through the years, but presumably do show promise into the future?
Well, there's two parts to the valuation of our business. We've got projects that, and Modi East is actually a new project just in an old area, where you can use net present values to, from cash flows in financial models that are independently audited. So you've got net present values. Then another part of our business is more difficult to value, which is where you are still exploring, you have ounces in the ground, they're prospective, but there's still a whole lot of risk attached to them. And there's different ways of doing that. Normally, the evaluators put in, a value of an ounce in the ground to it.
But for a normal private investor who doesn't have the expertise to perhaps crunch those numbers, is there any easy way that they can look at this company and say, well, Aflease is trading at R1.57. If the gold price goes up $20, it should be trading at X?
The only reliable way to do it is to look at how many ounces you're going to produce, what's your cash costs, and you can work out the margins.
Of course, to make your company more complicated and going through, there were pages of IFRS annotations. To make it more complicated, apart from that, is that you're in the process of doing a merger to see that you'll be listed on both the Australian Stock Exchange and the JSE as Gold One.
Yes, that's correct, Alec. One of the areas where we know we've got future challenges is we have some projects in the pipeline that are going to require further capital should we decide to develop them. Modi East will generate quite a lot of cash, but not enough to fund those projects as well. So we've got to ensure that we are well positioned to raise capital in the least dilutive or the most cost-effective way.
I'm just trying to get to where the shareholders would look at this and how they start valuing whether they should be holding on to their Aflease gold shares right now in the anticipation of Gold One coming into existence.
Well, certainly the share will be more highly rated in Australia, and that's the primary reason that we're going there.
Just to close off with, your old friends at Uranium One, you're going to be Gold One, and Uranium One was the company that you brought out the old Aflease. They seem to be getting back on track now.
Yes, look, Uranium One is a company bigger than one mine, and certainly part of the strategy was to build a big uranium company that could survive any sort of downturn, any technical hiccup, and that's what you see today.
Neal Froneman is the Chief Executive of Aflease Gold.